Welcome to Confluence 2.9, aka let's get this bag. Alright? Okay, so Confluence 2.9 is a part of my Confluence series. As you guys know, there's Confluence 1.0 that pretty much I put publicly on YouTube, that has over 27,000 views now, that still makes people money. You know what I'm saying? So it kind of shows you that, even from the start, this shit had a lot of freaking knowledge and a lot of power to actually make a person better at trading. All right. And then you had Confluence 2.0, 2.5, and then 2.9. So you shouldn't even be watching this video right now. You can stop this video right now if you haven't even completed the course, as far as completed the phases and you're progressing with the webinars, which means that there's phases, there's the major market patterns that you have to complete also, and then you have to slowly progress with the webinars. The webinars are major as hell. I would not put it on the site if it was for no reason. You know what I'm saying? To fucking take up space and shit. I'm not with that. All right. So make sure you guys are pretty much applying yourself, because at the end of the day, there's probably, a small percentage of students that's probably, still lost. But at the same time, if you don't put in the required time, then you're not going to benefit from it. You know what I'm saying? Like, I tell people all the time about my story. Like, I was in the house, like, busting my ass on the charts every single day, because I wanted it. You know what I'm saying? So now things are like almost second nature to me now. You know what I'm saying? So which means that if you put in the work that is required, not just put in the work that is required for this, which is a lot of freaking charted time, a lot of freaking just paying attention to the market, so you can actually, understand it and, possibly even fall in love with it. Because once you do fall in love with it, you're going to want to study. You're going to want to do everything just cause. All right. No one told you to. You just want to do it just cause. Hashtag just cause. All right. So at the end of the day, guys, I'm going to be talking about a few things on Confluence 2.9. We're going to be talking about a lot of stuff. There's going to be a lot of freaking examples and everything else. So make sure you pull out that notepad. Okay. All right. So at the end of the day, this right here is a clean chart on USD JPY, mainly because it's the main pair that I do trade. You can still apply every single thing that we're going to be talking about to any other pair also. You know what I'm saying? But right now, we're focusing on UJ. So first things first, remember, sexy charts always are all about just putting certain things on your charts for certain reasons, but not cluttering it, which means that I can still analyze at the end of the day, you know what I'm saying, with everything on my chart after I've done my full analysis. All right, so the biggest things that I have to actually start off with first, as you guys know, like, I like to keep my moving averages on it. I don't have a lot of indicators, but at the end of the day, like, I do have my moving averages. You could just type in moving if you want to. Moving. Exponential and moving average. So that's going to pop on the back screen, those two little blue lines. Right. Click here. Boom. EMA. 8. Number 2. Boom. 18. All right. So the biggest thing with this guy is that a lot of people just like fail to realize trading is definitely based off judgment. So use your own judgment. Write that shit down in big letters, because at the end of the day, like, that's really all it's based on, your own judgment. So like, once you actually understand the market good enough, hopefully your judgment can get as good as mine's when it comes to actually charting, because it's literally just based off of your own judgment. Like, is this a lower low? Is this a lower high? Like, you have to pretty much be able to analyze that, and using time frame correlation is a huge thing also, because the market is literally just showing you prices. It's not against you. It doesn't even know you. You know what I'm saying? It's just showing you data. That's all. And then your job is just to analyze that data to benefit from it. You know what I'm saying? Simple as that. You know what I'm saying? So like, don't ever think the market is against you. Literally, the market is just showing data based off of what's going on in the world. You know what I'm saying? Like, that's just what it is. So don't have that mindset to think that, oh yeah, the market's against me, this and that. you're wasting your time, honestly. Like, that's how I was when I first started trading. It was a big fucking waste of time. Don't waste your energy, okay? Just learn how to chart good and benefit, period. So the biggest thing is, you guys have to always notice where you are at all times in structure. You know what I'm saying? Once you lose where you are in structure, then you're going to fuck up, period. And knowing that every single piece of a candle tells some sort of story. If you can understand that story, cool, then you're going to benefit from it. But if you can't really read that story based off of like how it's forming, then you're not going to benefit. You know what I'm saying? You're going to get lost and then probably even miss out on a trade, or even close your orders negative because you were scared of a certain kind of drawdown or something like that, because you weren't able to actually analyze it good enough. All right. So at the end of the day, like I would always start off like on the highest time frame first, see like where I am on the highest time frame, seeing how these candle wicks are forming. All these candle wicks show something. You know what I'm saying? Like, this is the area that we're currently in. So like, whenever people always ask me, where is the relevant price? Right here is relevant price. This is only 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It's over a year worth of candles all right here. It says a lot. You know what I'm saying? So you don't have to pretty much go all the way back in time. It doesn't make sense. Like me seeing something that happened over here in 95, like, I don't give a fuck about that. That shit does not benefit me. You know what I'm saying? I'm focusing on where it matters at this moment in time. You know what I'm saying? Because it's not as if I'm going to actually be holding a trade for fucking 10 years. You know what I'm saying? I'm only holding trades for a certain amount of time. You know what I'm saying? Where scalpers, intraday traders, and swing traders, but even swing traders don't hold trades for fucking 20 years, 30 years. Like, you know what I'm saying? Just always use your own judgment. You know what I'm saying? A lot of this is common sense. Common sense. So don't overthink it. Don't think that trading is fucking complicated. Trading is very, very simple. It's not easy. It's very simple though. Simple concepts that you have to apply in different situations. So the situations, things can happen at any time. You know what I'm saying? So like, knowing how to pretty much trade the market in every situation is very, very important, mainly because that's why like I'm able to trade in non-sessions, in sessions. It doesn't even matter. All I know is that in sessions the market is very, very slow or very, very fast. It depends on the kind of session that it's currently in. You know what I'm saying? At the end of the day, structure is still going to be structure. Market is still going to give me price type confirmations based off the candles, so I can actually benefit from it. You knowing how to read it is all on you now. Okay? That's the big thing. So look, seeing how we're looking at like right now, we start off on this monthly time frame. We have a cross of the SMA and EMA, which shows blue over red, which shows that there's a lot more buyers inside the market than sellers at this point in time based off of that indication. So then we had a lot of buyer exhaustion up here, seller exhaustion down here, but also what helped me realize that area right there is looking at how these candles are forming now. You know what I'm saying? This is where candlestick analysis comes in big time to help you benefit from these kind of moves. So this right here was this top of this bearish candle. Once this candle pretty much closed over this opening of this bearish candle right here, that showed me one thing. There's more buyers in the market than sellers at that point in time, as well as the SMA and EMA cross confirmed that right there. So that was two confirmations right then and there based off this monthly time frame. So remember, if you want to even write this down as far as, okay, on the monthly this happened. So you're always keeping in mind where you are at trend at all times, what happened on a higher time frame, and how the lower time frame can actually, take effect from that right there. All right. All that is very, very important. Every single data on the market is very, very important. You could always use every single piece to help you, fit that puzzle, you know what I'm saying, or build up that puzzle. So that's the monthly time frame. So you could make a check mark on that monthly time frame and pretty much, write down your confirmations and your reasonings for your certain bias based off of that monthly time frame. Next, on the weekly time frame, the week is very, very important as well. Like some areas that I did actually analyze based off this weekly time frame was that, this whole entire area that it was currently on was a big range. This range was over 500 pips, as you guys can see, 564 pips, which means that this was a range that the market was kind of stuck in. But seeing how it's forming like right now, it's showing that there's a good amount of buyers inside the market. You know what I'm saying? But at the end of the day, like, it's in a range still. So like this range can probably, drop smaller, but at the end of the day, it's still in a range. So you could find sell opportunities there and buy opportunities at this point in time. Nothing is super long term at the moment because we're not holding trades for fucking weeks and weeks and weeks and years and years and years. We're only trying to catch, a couple hundred pips. Come on. So that's all we need. Based off the lot size and how my risk management is and everything, we don't need much out of the market because we can pretty much benefit from that, from just, a good amount of moves. But we don't have to marry the trades. We don't have to marry any trade. All right. So I'm keeping this in mind. On this weekly time frame, you had that range as well as you had an SMA and EMA cross, buyers over sellers at this moment in time, which means that there's more buyers in the market than sellers. And we also had a nice range, which was up here as well. A range that was right here. All right. So this range was very, very important, mainly because this right here was one of the highest points inside this area. Let me just put this as orange. Boom. All right. So on lower time frames, I'm gonna show you guys how I actually benefited from catching this kind of move up here. Remember, this move was based off of, I think it was a couple weeks ago. But I benefited from this move as well. Just being able to analyze this area and taking advantage of it from all the way down. So let's go on a time frame that we actually see details from that area. So I was looking at structure all right here. You had your higher high points and higher low points and everything else. And then you had a break of a level of support, which was also considered as this higher low point as well. So I consider this area right here as a break structure. Boom. All right. Broke structure here. Boom. Then you had your first like lower low in this example, right? But then this market actually retraced all the way up here, which means that it retraced all the way up to 100% based off of this area actually still respecting this entire range up here. All right. So that entire range was like 100%. If you want to measure with your fibs, you have your point A up here, point B all the way down here where the market found that level of support. So you have your bearish candle, bullish candle. After that, those two indications alone, that confirmed that that area was your level of support. All right. Same as your level of resistance, bullish, bearish. That's a tested candle. This right here is a tested area also. You know what I'm saying? And I'll definitely use those as my point A and my point Bs. So the market actually came all the way back up to 100% area. It passed there. It went to 120%, but at the end of the day, it came back to close on 100%, which means that this area was still considered as what? A tested candle. All right. So that area of structure was still being maintained for that entire area the entire time. So we know where we are right now. We're at the highest point of this weekly zone where this orange zone is, as well on lower time frames such as the H4, we're on a 100% retrace, and we're seeing a tested candle, and we also had a break structure as well. So then we can start taking advantage of these areas all right here. All right. So let's clear the chart up real quick. And remember, this is how you keep sexy charts. You know what I'm saying? So then we had our point A right here, which was the top of this bearish candle, and the area down here, which is the bottom of this bearish candle. So top to bottom, point A, point B came all the way up to 61.8%. Remember, we know where we are on the higher time frames. You know what I'm saying? We know that we're at a level of resistance. We had a cross of that's many EMAs. We had, a lot of indecision around this area that is currently at. Remember, this is where we are on this weekly time frame. So we're literally around this area right here where all these buyers exhaustion areas are. That's what we're actually analyzing. You know what I'm saying? And the reason why we're analyzing that is because it came up to in the same area that it once was, an area where it showed a lot of buyers exhaustion. You know what I'm saying? So analyzing this area once again, we're able to actually analyze this area more in detail on lower time frames to pretty much take advantage of that, and to catch pips. So back to where this area is. So 61.8 based off of the H4 time frame. Let's go down to H1 real quick. All right. So H1 shows that 61.8% area still being respected. This area right here, I would definitely, definitely make sure that it's not going to pass the high point. And then I'm also noticing that it's starting to create lower high points as well. and even on this time frame also, it's creating, you know, a nice break of structure areas along these points right here. So like these aren't major levels of structure, but at the end of the day, it's a major level of support. So you got to always account for structure points and support and resistance areas. They're two different things. You know what I'm saying? So you got to just, you know, keep in mind on how you actually categorize everything. All right. So this right here is good. After that, then you had your point A, point B, and then you had that retrace. That retrace came all the way up to a 61.8%, a nice bearish engulfing pattern, which says that there's a lot more buyers, well, a lot more sellers inside the market at that point in time. But then, you know, would you wait? Why not? You know what I'm saying? Because even if you even missed that area right there, it would have still been solid, because then you had another area of exhaustion up here as well, a buyer exhaustion, and then you had a nice bearish engulfing pattern. So the way how you would actually take advantage of that right there, I wouldn't actually get in based off of this H1 candle, boom, you know what I'm saying? I would definitely mark it off, you know, so I'm actually keeping count of everything. Remember, like, I would not want to enter the market if on any time frame. I wouldn't want to enter if it's like showing this type of exhaustion towards the bottom. Okay, so let's mark this area off and break it down to a lower time frame now. Let's go down to like the M30 or something like that, since it's a lot more in detail first. Then if we need to, we'll go down to M15. So this area right here was the same area that we're currently at. So seeing how it's still kind of boxy, let's break it down to a time frame that shows a lot more detail, so we can analyze this counter trend right here, this blue candle. So let's go down to M15. So same area right here, we pretty much took in account on everything that was going on higher time frames. Now we're pretty much analyzing this area right here. Now seeing how it happened at that nice push down, seller's exhaustion down here, then had the retrace, and then across of the SMA and EMA, as well as a bearish engulfing pattern right here also. So that right here was pretty good. Hold on, wait, click. Bless me. Boom. That right there would have been one entry opportunity right there, and then pretty much you would have been able to actually maintain this order and even enter more orders as you're going also. But remember, we analyzed this first on the weekly time frame, and then pretty much on the H1, M30, all the way down to M15, which gave us a better entry opportunity for this entire area that it was currently on. So once this area actually made a level of support down here, we could then pull out our fibs once again. Shoot. Okay, so on right here, point A, point B, right here. Wait, right here. Let me highlight this area real quick for you guys. So point A at the top, bearish wick right here, where the market found a level of resistance. Point B all the way down here. All right. So then we're able to actually measure this counter trend, which came all the way up to 38.2%. So the thing is with this right here, you can either enter off of just waiting for it to break this level of support right here, where this candle was starting to form, you know, those wick areas, and then wait for that nice bearish candle that formed after it. So this trade right here would have been definitely based off confidence. You know what I'm saying? So trades and everything is based off of just confidence, understanding of candlestick analysis, fundamentals and technical analysis. So like this trade would have definitely been like one of those confidence trades, because it did actually have a nice pullback. But if you went on lower time frames such as the M5, which I can't do because it's kind of a far back now, this right here would have definitely been some sort of counter trend which maintains structure for the structure that it was currently on at this point in time of this trend. So going on lower time frames, on M5, you could either entered off that lower high point that it did form, or entered off of this area right here, which pretty much showed that 38.2 test, as well as, you know, seller's and control type of move inside this area, because this right here would not have been valid because it went to 23.6. So that 38.2 made it be a lower high point for this structure that is currently on. All right. And then after that, like this, maintaining orders and everything could have been pretty easy. I like to use that negative 27% as my projection areas, mainly because there's going to be an always point in time that the market's going to try to make a higher high or a lower low. And then pretty much these areas of supports and everything are always pretty much lined up with that negative 27%. All right. So this could have been your exit point for this entire move. This entire move would have been a total of around, so 24 pips on that order, and then pretty much 35 pips on that order. You know what I'm saying? So like it's all about just knowing how to pretty much finesse the market to the best of your ability and find more entry opportunities on that same trend. Remember, like this entire time that we're analyzing this area, we're still analyzing this based off of what we analyzed based off the H4 time frame. You know what I'm saying? So we're still on one move. But we're just analyzing it based off the details and everything that this move actually offers. All right. Then there was another time that pretty much I had caught this move like down here. I caught this downward move and I caught this upward move. I got out here and then I got in again, based off of just, you know, understanding structure and understanding exhaustion areas throughout this entire time. So another big move that I caught this past like week or so, actually last week, I actually noticed that there was a lot of exhaustion inside this area right here, and so many people were asking about how the hell did I get entries there and everything. Like, what did I see? First of all, you got to always notice everything on every single time frame. This is why time frame correlation is so important. Once you understand like what's going on, why price did this, why price did that, it's all about just understanding time frame correlation and taking advantage of it on lower time frames. So this entire area all right here showed what? Exhaustion inside, an entire range of exhaustion. You know what I'm saying? So this is what I was focusing on when the market was inside this area. This was an area that was being, you know, bounced off from week after week after week after week after week. You know what I'm saying? So like looking at that, I was able to actually go down to, you know, on lower time frames and take advantage of that entire fucking move. All right. So let me break down this past move that I caught all right here. So while this market was on its downtrend right here, the red was still over the blue, which maintained that downtrend structure, as well as structure was still maintaining itself off of just market structure. Your lower low points, lower high points, lower low points, lower high points. And then pretty much this right here was an area that was shown as consolidation on a lower time frame. Let's highlight this a different color. So this area on, I think H1, it was. So I wouldn't really look at this area as an area of structure. I'll look at it as an area of just resistance, you could say, not really, you know, structure or nothing like that, or exhaustion. So I'll line this area off right here, and pretty much after that, just find that nice meeting point throughout the entire area. And this area was that meeting point because no area was broken beyond this point right here. This area was actually tested. It had a bullish candle, doji, bearish candle. So like that area was still maintained as structure throughout that entire time. So when I actually was inside this move right here, I cut this move down. I analyzed this area all right here, seeing that we had a lot of exhaustion down here. And that's the same kind of moves and everything that I was talking about based off of the daily time frame. First, the daily time frame gave me enough confirmation first to even take that up that counter trend, because everybody was saying that I'm counter trending. I was like, I understand that I'm counter trending. I get that. I'm fully aware of that. So you had a nice big wick area on the bottom of that daily candle, and then pretty much the next daily candle after that pretty much did the same thing. So I was analyzing this area on lower time frames to pretty much be able to catch that up move, and then pretty much I found an area that pretty much told me to, you know, slow down with the lots and, you know, start closing my orders out, because that area of resistance was not being broken. So like, just keep in mind where this yellow area is right here, and let's go back down to this H1 time frame. So on this H1 time frame, right here, a lot of exhaustion once again, and all I was looking for here was pretty much a break of resistance. You know what I'm saying? Not a break of structure, not a break of nothing like that. Just a break of resistance. And I think I analyzed this on the M30 actually because it had a lot more detail when I was actually trading it. So this right here was the area that I was analyzing. I was not looking for a break of structure once again. I was looking for a break of resistance. You know what I'm saying? So what counted as an area of resistance was technically like areas like this, or right here. That's all tested, as you guys can see. Then you had another area of resistance once again, which was over here. You know what I'm saying? Boom. So all right here was being respected. All right here was being respected. And once this area actually broke out beyond this point, you had a nice breakout here, a little pullback, cross of the SMA and EMAs, as well as a bullish engulfing pattern right here. And pretty much I had took this area up. So my entry was based off of this area right here. I took it up all the way until the market actually started to find some sort of exhaustion up here. As you guys can see, this right here is the area of resistance. Down, and up here, the market actually started to find, you know, the long top wick areas, which started to show buyers exhaustion. You know what I'm saying? That's very, very important to actually, you know, start looking for exits and everything else. From there, I pretty much exited my order somewhere around like right here. And once this market actually broke this level of support, I found more entry opportunities once the market actually came and broke this area, came back down, make that nice bearish type variation off this 1, 2, 3, 4 candles. Got in again, and I wrote that shit all the way down again. You know what I'm saying? So it's all about just knowing how to pretty much understand candlestick analysis and taking advantage of it on every single situation that you do get. Every single situation on the market is going to be very, real different. You knowing how to pretty much, you know, adjust to it is the biggest thing. That's what's going to separate you from everybody else. You know what I'm saying? That's why I'm able to trade every single day. You know what I'm saying? If I want to, because I know how to pretty much adjust. And you can't marry trades. Marry trades is only going to get you fucking blown accounts. You know what I'm saying? You're going to hold trades way too long and think it's going to go one way, but you're been wrong. You know what I'm saying? So it's all about is knowing how to adjust to the market and never ever marrying a trade, because, you know, it's not going to ever turn out good for you. Remember, so this right here, I got back inside the main trend. I took this counter trend only based off of, you know, that exhaustion area based off of the daily time frame. Then I got back in the main trend once it actually, you know, found some sort of exhaustion area, and then pretty much transitioned back into a downtrend once again, which was considered as a lower high point based off the higher time frame, such as the H4. I think it was the H4. I keep on losing track of what time frame these are on. So yeah, it was a lower high point based off the H4 time frame. This area right here, this exhaustion area where it was just a level of resistance, it wasn't anything really, just consolidation zone. So it was your point A, point B, point A up here, point B all the way down here at the bottom of that bearish candle wick, all the way up to a 50% area, and pretty much around that same point, it was forming a lot of exhaustion areas on H4. And pretty much a nice bearish variation on H4 as well. So you having all those confirmations should have given you enough confidence to even take that kind of trade. Okay. Next, pretty much you had a nice little pullback like right here, but then this area was a 23.6, so it didn't really count as a level of major resistance or even a structure area. You know what I'm saying? So I just kind of like ignored it for a tad bit, and then I had my point A up here at the top of this bearish candle wick. So as you guys can see, 23.6, all right, respected. Then you bring it down to that next level of support. So this area right here actually broke structure. It broke structure, and then it made a new higher high. Boom. So at that 110%, you had that new higher high point, which is right here. The computer's kind of slow right now, so it's kind of like lagging on my end. Ellipse. This right here is your higher high. All right, so that's your point B. So you had your point A down here, point B up here. Then you had a nice pullback, which came all the way down to 38.2%, making that the first higher low point for this new trend. Okay, so whoever actually made this kind of move, like right here, would actually use the same area for the projection, the same fibs, and it came all the way up to negative 27%, which closed perfectly. A lot of exhaustion up here and a lot of exhaustion based off the daily time frame around that same area as well. As you guys can see, you had a lot of exhaustion. Hold on, let me just clear this off real quick. You had a lot of exhaustion with these wicks up here on these candles. So like when these candles started forming these kind of wicks, it should have gave you some sort of indication that this area is actually slowing down in the momentum. And actually all these dojis after it formed a lot of indecision also. But seeing how you're actually inside this area on lower time frames, you would have already had a hint that this area was pretty much transitioning to a certain extent, looking on probably the M15 or M30 time frame. But trading with discipline, you would have definitely used your negative 27% as that projection area for that area of your exit. You know what I'm saying? So sticking to that alone, would definitely make you a lot more consistent in your trading. So next, this same area that I pretty much analyzed right here, right? So this area showed a whole bunch of exhaustion where the week after week, the market did not stick in those areas, all right? Remember, weekly time frame, we already had an SMA and EMA cross, which shows buyers over sellers. So 1 week, 2 week, 3 week, 4 week, and 5 weeks, we had no type of close of candles inside this entire area right here, which was crazy. You know what I'm saying? So like, keep in mind about all these little details right here are very, very important. So like, try to write things down in your trade plan or even on a whiteboard about things that's happening on higher time frames, so you're always aware of it just when you're trading on lower time frames. So a lot of people was curious on how actually cotton moves at like 112 360, 112 350, those two moves and everything. Like a lot of people was confused on how I actually caught those things right there. First of all, you have to know where you are at structure at all times. You know what I'm saying? So seeing how we actually made a new high up here, we had a higher low right here. So what does that mean? This right now is my point A. This right up here is my point B, where the market found a level of resistance. It wouldn't be right here because you got to find it at the highest point of where the market found a level of resistance. You know what I'm saying? So the first area I would have probably put it is right here on these 2 points right here. Bullish bearish. So point A, point B, it came all the way down to, you can even probably put it a little bit higher also, whatever. It doesn't even matter. It's just like the same shit, honestly. So 88.6% retracement, which means it's a steep ass retracement. You know what I'm saying? So when the market actually formed this area right here, you would definitely be paying attention to it. Let's form some sort of square so we can focus on that area. So this is the area that we're focusing on throughout this area point right here. Remember, keep in mind, we already broke structure on the H4 time frame. You know what I'm saying? So like that's checked off. We already made a higher high point. We already made a first higher low point. We already made a new higher high point. And now we're at the second higher low point in this structure right here, which came all the way down to 88.6, which means that it could be a very, very slow type of move up, which, it did happen. It formed a lot of exhaustion towards the bottom, which gave us a lot of hint when the market was inside this area all the way down here. And keep in mind, this is the same area that never ever closed on a candle on a higher time frame, such as the weekly chart. You know what I'm saying? So like this orange zone is still valid. So when I started to analyze this area right here, I seen a lot of exhaustion on that higher time frame. Beyond then, I was actually analyzing this area on these lower time frames, such as the M30 and even the M15 chart. Okay, so let's break it down to M15. I see like what I need to see so far. This right here was all this exhaustion area based off the higher time frame. As you guys can see, it had a long ass wick here, settled exhaustion. It didn't actually break that area. So like this area tried to make it up, but it didn't actually close beyond that area. So it maintained that seller's exhaustion that it was forming in the first place on higher time frames. You know what I'm saying? Remember, it's still inside this orange zone also based off the weekly chart. Let's go on the M15 chart real quick. Okay, so all that I was looking for here was a break of a level of resistance. I wasn't really looking for a break of structure all too much because I knew where I was in structure. I was at an 88.6 retracement based off the H4 time frame, and I know that is pretty much already in an uptrend. Structure already broke on the H4 time frame. I know where I am. You know what I'm saying? So knowing where you are at all times is the biggest thing. That's what's going to separate you from everybody else. So keep that in mind every single time. Don't lose track of structure. Don't lose track of where you are in the trend. So what I was looking for was a break of resistance. So like right here is resistance. All right. Right here is resistance once again. You know what I'm saying? It wasn't breaking these areas for a while. Then you can even draw some sort of ascending triangle down here also to even help your analysis. All right, a nice ascending triangle along with the SMA and EMA cross. And then my first order was at 112, 112.350. Let's put a green line there. Horizontal line, 112.350. 112. What the fuck is 350? Up here. Let's say right there. Okay, and the next one was at 112.361. So like right there also. So around this area right here, I was looking on the M5 chart because I wanted the best entry opportunity if possible with a good amount of confirmations also. So like seeing how it's actually formed on the higher time frames on the M15 chart, I was pretty much like pretty clear on like what I was actually trying to like get out of this market. Okay, so entry there. So the thing with this right here, I wanted to actually wait for a nice pullback. So I never really want to enter just solely off just the bottom. You know, I want like a nice pullback before I even enter. All right. So my first entry opportunity was actually given to me right after this break of a level of resistance. I would definitely have to wait for the break first, mainly because like that shows buyers in control. Then you had a nice pullback, and then some sort of seller exhaustion area down here, which with this long ass wick form on the bottom. So seeing that could have indicated something since it actually broke that level of resistance previously, and it already crossed the SMA and EMA on the higher time frame. So long ass wick. After that, nice bullish candle, some sort of seller exhaustion, but pretty much it never actually closed beyond this bearish candle again or this bullish candle again. So like it was more buyers in the market than sellers, even at the smallest detail. You know what I'm saying? So like every single detail counts. So once that happened, all I was really waiting for was a break of this area first. Let me just random line. A break of this area first. Cool. All right. So after that, it went up pretty aggressive. Like as you can see, 5, 10, 15, 20 minutes. Like it was pretty quick. So once this area actually broke this point right here, which was beyond this bearish candle, that could have been your first entry opportunity. Your first entry opportunity right there. Once it actually broke beyond this bearish candle. Because remember, we already know where we are on higher time frames. You know what I'm saying? So like we're not really concerned about that all too much. So once this area actually formed, it had some sort of nice like a wick area. When it actually pretty much formed that pullback right there, I analyzed this area, point A, point B. Remember, it's all about knowing how to pretty much use your fibs and how to apply it every single time. If you're not applying your fibs correctly, then you're not going to draw it right. That's just what it is. Okay. So you had a nice touch of 50%. It actually had a bunch of exhaustion area down here for sellers. And then it pretty much formed a nice bullish candle. So like when it actually first broke beyond this point right here, you know what I'm saying? And look how the candle formed. The candle formed no wick type candle, which means that there's a lot of buyers inside that candle right there, right? Which was a good indication for me to actually put in my entry opportunity. So that's why my first entry was at 112.351, 350. And then my second entry opportunity was 112.361 when I pretty much analyzed that area on like the M1 chart when I was really, really trying to finesse the market for all this fucking worth. And I also had an entry opportunity at 112, 412 as well. Yeah, I had entries like literally all over the place. The next entry I took was 112, 560, which was all the way up here. All the way on these wicks up here. So around that area right there, I was literally on the M1 chart for a good amount of time because, I already seen where the market was headed, and I was looking at all these small details and everything to pretty much help me gain more entry opportunities and stick to the same trend that I'm actually currently on based off of the H4 chart. So 112, 560, boom. All right, entry there, entry there, entry there, and each entry got like around 75 plus pips. You know what I'm saying? That's why each order was $1,400, and $1,000 on a two lot, $1,400 here, $1,400 here, and then $1,000 plus on this order right here. So I took these orders up for a good amount of time also. I stuck to my main trend, and yeah, I rode that shit up. All right. So these moves right here, it could have definitely, like rode out a lot longer. But at the end of the day, like you guys always gotta like put yourself in discipline, by just getting the market for a certain amount of pips for that point in time, because you never ever really want to get to the point that you're marrying a trade. That's when things get real nasty. On this trade right here, also, hold on. Probably this happened first and then that happened next. I'm not sure exactly, but first orders were right here. I think I probably took that second order probably like right here. Then I forgot how the order that it was all in, but pretty much it all went pretty much good for over 80 pips. And yeah, keep on going up. Now where the market currently is right now, it's back at a point of exhaustion. You know what I'm saying? So what I was looking for like last week was the market was forming all these exhaustion areas up here in this long ass wick, because based off the weekly time frame that it was first being analyzed on, it formed more sellers in the market than buyers at that point in time. But also seeing how the areas were forming on lower time frames, I pretty much analyzed that with the higher time frame, and it never actually broke this area right here. So it started forming exhaustion areas early, which means that it could definitely affect the higher time frames overall pattern that it was trying to form. So seeing all that, seeing how it formed like right here, a bullish candle, a nice doji candle, I could definitely analyze on low time frame to see like what formed that doji candle. You know what I'm saying? You got to really understand and really dissect what happened on low time frames for that candle to even form that way that it did. Okay, a bunch of sellers exhaustion all up here. Sellers exhaustion, back to back, bearish engulfing pattern right here also, and the SMA and EMAs are slowly crossing. So it could definitely, transition down for a tad bit more. I'm not sure how long, but at the same time, we're flowing with the trend based off of the higher time frames overall move, and then pretty much analyzing that on low time frames to benefit from, those 50 to 80 to 100 pips moves and everything that we can catch each time. Okay, so that's how I was pretty much analyzing this entire area right here also. And even when it came down to this area as well, I even took areas based off of, break structure right here. Then pretty much after that, I pretty much got in opportunities all up here. So then now I'm in profit about, I'm not sure how many pips, but I'm in profit a good amount like at this point in time. You know what I'm saying? So around this entire move all right here, you could definitely look for more entries and so on and so on and so on lower time frame structure to even benefit from this kind of move that it was currently pushing to. So the biggest thing, guys, exhaustion areas, looking at details on each and every single candlestick type pattern and benefiting from that based off of looking at lower time frames also. So it's never about sticking to one time frame. It is never one time frame. Write that down also. It is never one time frame. It is never a certain kind of pattern. Every single in the market is going to change. You know what I'm saying? The market changes every single second. You got to know how to pretty much adjust to it. Once you're adjusting to it, on how you should, you could benefit the most from the market. But if you're stuck in your old ways, egotistical ways and everything, you're not gonna ever really adjust to the market or even try to like, find new things, because you're so stuck on one thing, because you found one thing that worked one time and then you're sticking to it. If I find a setup that worked for me one time, cool. I don't care about it anymore. You know what I'm saying? Because the next entry and everything else is going to be for a different reason. You know what I'm saying? So it's all about adjusting to the market. Never ever marrying or even being stuck on one part of the trade or a certain kind of trend that you're currently in. Always adjusting your bias and everything based off like whatever the market is trying to show you, and then flowing with it. All right, so this right here was Confluence 2.9, guys. Hopefully you guys learned something from it, as far as the details and everything else. And yeah, so you guys should not have watched this video if you guys didn't watch the previous Confluence videos also, because remember, it's a series. You can't skip to season 4 of Friends and know like what's going on, because you didn't even watch season 1. You know what I'm saying? So you guys gotta watch season 1, which is Confluence 1.0, then hop to Confluence 2.0, 2.5, and then watch Confluence 2.9. It's a growth thing. You know what I'm saying? That's why I still keep my old webinars on there still, because I want to see people grow like how I did, and I want to show y'all my growth and everything on how I'm charting, how I'm looking at the charts, how I'm looking at details, all that shit, because everything matters for the build up. You know what I'm saying? And the level up is real, as you guys can see in Wall Street Academy. You know what I'm saying? We have students making all kind of crazy money daily, weekly, that kind of shit. So I mean, those that take it seriously is going to benefit the most from it. But first things first, you have to put in the work that is required to get the most benefit from it. You know what I'm saying? If you're not putting in the work that is required and then trying to cheat yourself by taking signals or anything like that, then you're not going to really get much. You know what I'm saying? Because you're taking signals when you can't even analyze the chart yourself. You know what I'm saying? I've never ever been a person to pretty much depend on anyone for trading. I've always been by myself, and that's how I work the best, and I'm pretty sure that's how any trader is gonna work the best as well. You know what I'm saying? So like, depend on yourself, gaining your knowledge, so you can pretty much travel the fucking world and trade in any country and still profit. It doesn't even matter. You know what I'm saying? Because you took time out of your lifespan to pretty much gain that knowledge that was needed to pretty much be able to pretty much have that time freedom and financial freedom to pretty much make money from any and everywhere. Okay, so hopefully you guys took a lot of fucking notes. I'm not sure how long this shit was, but I'm pretty sure it's long. And another thing also, keep in mind about candle lifetimes, meaning that the beginning of a month or the beginning of a week, those candles are not really valid all too much, because it has a long lifespan to go. I personally look on monthly candles the most on like the end of the month, like right now, this monthly candle is the most valid. Or on the end of the week, like Thursday, Friday is the most valid. You know what I'm saying? That candle's about to close soon. So just keep those in mind also. And what else? I mean, shit. That's about it, really. Keep your chart sexy. Keep your chart sexy, clean. You don't have to have a shit ton of things on your chart. As you guys can see, I don't have RSI, ADX. If I need to use them, cool, I'll use them. But there's not always a time that I have to actually use those kind of indicators. You know what I'm saying? So I see people coming out with different, reasons to use them. I'm like, yo, you're making yourself believe something is there. You know what I'm saying? So compared to that, to a person that pretty much understands candlestick analysis, you don't need certain things on your chart, because you already had a confirmation from pure price. Okay? So keep that in mind, guys, and I'll see you guys on the next Confluence video. Who knows, Confluence 3.0 or Confluence 3.12. I don't know. You know what I'm saying? So I'm going to see you guys on the next Confluence video. I'll see you guys. Peace out. Deuces.